Tuesday, February 11th, market analysis, Stan Ehrlich. We start out with the stock market indexes and go to futures and sometimes other topics like cycles, seasonals, maybe a little psychology of trading, variety of things. So today we have the indexes slipping off at one particular point and then coming back reasonably well. We are now currently very slightly lower on the day, lower than yesterday's close. None of the indexes have been above yesterday's high, making any upside progress, and none of them have been even super close to yesterday's lows, but at least halfway down or a little more than that in yesterday's range. So you've got dojis inside trading range days, not particularly significant for the most part from a technical analysis standpoint, price action standpoint, and as a result, a lot of nothing. So basically what I said yesterday goes for today. I still think this market is starting to roll over. It's taking its damn time about it. It's now been a little over 2 weeks that we have been, for the most part, in the same price range on a closing basis. So a couple of minor exceptions. Every time we dropped off, it came back. Every time we rallied, it came back down. 1 minute chart back and forth. We got the spider, same thing, back and forth for approximately a couple of weeks. It's notable that this has started ever since the market in the spider made a new high, historic high on January 23 and 24, and couldn't go anywhere. It stopped cold turkey, slipped back, tried it again, didn't do it, slipped back, tried it again Friday, bearish engulfing. Now, inside relative to Friday, and today's range is, for all practical purposes, essentially the same as yesterday so far. 1 minute, it ain't going to show much. Next, we've got the QQQ. Pretty much the same thing. We didn't have a high enough to make a new historic high, but came relatively close. Do we still have this head and shoulder top I've been talking about? The more, like I said yesterday, the more it goes sideways, the more it ruins the pattern, the more it doesn't conform to the typical way that these patterns develop, and the more likely I am to abandon this pretty damn soon. But I'm going to procrastinate, which I don't like doing. Normally that causes problems. But I'm not in a trade here. I'm just analyzing it. So I'm going to wait a little longer to see which way it breaks out, and that'll be closing above Friday's high or below Friday's low. That's pretty much the breakout for me short term at the moment, because Friday was a significant bearish engulfing that just hasn't had the appropriate effect on the market yet, or it's a bad signal and it's going to go up instead. We'll find out soon enough, I hope. Q's on a little rally at the moment. NASDAQ, almost the same story, except this is going sideways much longer. And the head and shoulder top is also in jeopardy in terms of what the heck's going on here since January 31st. That all of this since January 31st essentially shouldn't be there. It should have been just gone up a little, maybe, and then crashed. Not even a little higher, and just simply after January 27th breakout to the downside. It didn't. So there's some serious question marks, but it's not completely ruining it. Next, the pattern. And we're looking at the 1 minute chart for the NASDAQ futures. Back and forth. Next, we've got the YM, Dow. Again, back and forth, but no head and shoulder. Here we have something similar to a double top with a good, so far, bearish engulfing sell signal on the top that just hasn't started prices to move lower and stay lower. First day after the signal was great, certainly provided profit opportunity on ER1 overnight, say the least. And we did rally enough to get short on ER3, probably back on February 5th. And that is doing okay. Nothing great, nothing super profitable, but the signal has turned out to be good, but not in a very flamboyant manner so far. Next, the 1 minute data on the Dow looks a little heavier, rallied, topped out, and starting to slip a little. Okay, Russell, horse of a different color. So, major resistance stopped it several times. We are in general starting to ease on down, but again, I really need a close below 2198 in order to drop down to the bottom of that support area in red. I haven't got it yet, but at least it looks like it's going to make a new low close for the past 5 previous days, maybe even more if it can slip some more. And the 1 minute's coming down some. Okay, bonds. We are finally out of our previous long. We got a buy signal on January 14th. I told you on that day we have green, bullish, engulfing. We bought the low of the day exactly to the tick on January 15th, and that was 110.30. It's because it opened below our ER3 bid, and it happened to be the low tick on the opening. Green dotted line represents the trade line over time, and we got bumped out this morning. So it took a very nice profit. So 1030 is almost 111, and this is 1501-ish. So 4 points, 4 big points, 4 grand. Full-size bond contract in about a month. Yeah, maybe a hair or less. And the notes. Well, the notes have got a problem here. They're down below the neckline on my head and shoulder bottom, which is now really bothering the crap out of it. It's not working right. We had a bearish engulfing, and I was afraid this would be happening. Friday, doji inside day on Monday, but today we did break below Friday's low, starting to go down because of the bearish engulfing on Friday. We only got about halfway up for the upside objective on the pattern, and to be honest with you, this is it. I just can't justify the head and shoulder anymore, and I'm erasing the various objectives and lines affiliated with that. Now what do we got? Oversold conditions, divergence, bottom, middle of January, no signals, came up, made modest new highs for a couple of months, settling back, maybe going to hit 108.20, maybe back to support the yellow zone here, 108.10 down to about 108 flat, and turn around and rally again. I do expect interest rate futures to continue to trend higher in general, but of course I'm trying to pick the day they turn for you guys. Next, crude oil, oversold, pardon me, turned around, 2 days now of good strong rally, back up above the old pennant formation, and a very, very large pennant formation at that, a year and a half in size, maybe even a year and 3/4, but a pennant. So I wouldn't be surprised to see it go all the way back up to 79.5, 80. This resistance area at 80 1/3, 82. That's the best I can say. No particular signal. Not too much to go on. So-so support, pretty sloppy area, but turning around. Heating oil, very, very similar. Now a new high close, it looks like, for about 3 weeks. And we did make a new high for the last 3 weeks by a very, very small few ticks. But we're still up there right near the high of the day, so it might even close above the previous highs for the last 3 weeks. Good. Now I think we're going to go back up to 2.5, 2.58, and maybe keep on going a little bit more. I like this bottom. You might call it a double bottom, and then we already broke out of the formation with a classic bullish move, big up day, volume wise, etc. Had the follow through, came back to support, and heading back up again. So let's measure that, which I didn't do before. You take the highest high between the two lows, and I'm going to take an eyeball here of the average price of the two lows instead of the lowest low here or this low. I'm just going to take an average. That's going to give us the ballpark. So the upside objective approximately is going to be 2.7. All right, I'll leave this in place and use that in the days and weeks to come, because I do think this is going to move up some more. Next, natural gas. I got to say, same thing here. Look, the head and shoulder top seemed to work out very well until this move pretty much right here a few days ago, February 6th. After coming back up toward the neckline, which is okay, February 3rd, you're supposed to go back down, and it tried to close a gap also. Didn't close a gap, closed half of the gap or a little more, turned around and made new highs the last couple of days. Not appropriate, not what it should have done. It should have kept going down February 5 and after. Instead, it went up. Too high, too much. I got to do this. I'm going to blow it away. No head and shoulder top formation anymore on what is this natural gas. It just is too goofy. So up against resistance, getting close, but not too close yet to overbought. I think this would go up a little bit more, going up to these previous highs, which it's already fairly close to. Gold won't quit. Still overbought. No signal yet. Any day now, and I keep saying that, and I say so until it happens, and I know it will. You know, even a broken clock is right twice a day. So anyway, I'm looking for a bearish engulfing red sell signal. That will cause me to scream bloody murder. You got a sell signal, get short. Go short, get out of longs, do both, whatever. Buy puts, sell calls, anything that'll make money in a down move. All right. Getting very close to my minimum upside objective based on the vertical size of the back of the pennant. If you measure the staff of the pennant or the flagpole, then you've got an upside objective of up here at 147. So we're almost at the first objective, but we're at a 70, we're at an 84 RSI. Look what happened the last time we were up there. We actually got a bearish engulfing, which didn't work, but it was very close to a top. I got to keep saying it. Watch out. This is about to top out. Silver. Slipping off a little bit, minor new low, last few days. Resistance area stopped the rally. Now we're basically trading most of today below the previous resistance area, and at the moment we're below it. Current tick. So I think we're going to come down probably 30.89, but the support area is more likely 30.15-ish to 29.46, and maybe even a little lower than that. There's some potential here of a very, very large top, but I'm not going to go into that right now. And we're looking at platinum. Well, we're up on the day very slightly in platinum, but the bearish engulfing signal that happened on February 3rd has not worked particularly well. It did drop a little bit more the next day, and the ER1 scalp on that date should have made a chunk of money, because the wick, well, I shouldn't say it that way. The amount of movement below the previous day's low during February 3rd was very substantial, and that is the amount of movement down from the new short sale price on ER1 triggers. So that was plenty of elbow room. Now, yes, it could have gotten short at a bad spot and then rallied a lot and stopped us out and with a losing trade for ER1 overnight and ER1 scalp, and then came down to the lowest low, that's not particularly likely. Next. Whoops, let me finish this. Platinum. Resistance, that's that's about the best I can say. I really think it's going to turn over and start to roll down. And if so, it's probably going to go below 957, maybe even all the way down to 906. But it hasn't started yet. I got to wait for something to grab onto here. Right now, it's looking a little bit more bullish than I'd like. I didn't expect it to be quite this strong this long. But again, it hasn't violated the golden rule, and that's the high of the bearish engulfing day. That was a hell of a great signal. That was exactly what I expect, look for, and I do get many, many, many times. And that was great also. We'll see how this pans out. Next, high-grade copper. Overbought, and I'll be damned. The high of the day today is exactly 4.7000, and guess what? 4.7000 for yesterday's high. If today's high was one tick higher, we would have a bearish engulfing ER sell signal that would have turned red, and that would have been a great sell signal. Now, this is so close, missing only one tick, to that kind of sell signal. I've got to claim that we have probably a high here. No signal like on this day. No January 17th that worked very nicely. Not great, but nicely. This one worked nicely. That one worked pretty damn great. That one worked pretty damn great as well. And a couple of buy signals that worked very nicely also. So I missed this one by one tick. I can't help it. Code's written the way it is. I've seen these things happen before. I'm going to tell you, I think this is the start of a down move, but no signal. Next. Beans, oil, meal, corn, wheat, cattle, hogs, and then a stock. Now, I'm trying to justify long-term bottom formation in grains. This looks like a possible double bottom. It came within 2 cents of a major upside breakout just a few days ago. Pulled back. Minor support held yesterday, but so far today we're down just a tiny bit, 3 cents. Not going up. I hope it turns around and starts to head higher very soon, and I can say something constructive about the beginning of a rally. Maybe we'll get another one of these bullish engulfings like that one that caused a one and a half day rally. We'll see. But I am just trying to justify a long-term bull move starting in grains, and I've talked about this for months. Next, same basic commentary, soybean oil, but at least we've got a rally going in bean oil. Really need to get up above 47.60 on a closing basis. And then we probably have some serious upside momentum. This could be a great big head and shoulder bottom. And if that's true, the upside objective would be 61.40, approximately. But that remains to be seen. The last shoulder, good. Head, good. Shoulder, first one, good. Neckline slightly upward slanted, very acceptable. Just got a ways to go. Soybean meal, maybe a triple bottom. I suppose a close cousin to a head and shoulder. The middle low is not the lowest low. That's basically it. Timing is okay. Looks like a cycle of some sort. Bottom, bottom, bottom. Well, there's no high really in the middle. It's either skewed to the right or left, asymmetrical. That one's pretty much in the bottom, the middle. Anyway, new low for the moment. Back in support. I think it's going to hold again. So now I'm looking for something to say about a bullish signal of some sort. Waiting for a bullish signal. Expecting a rally soon. Corn. Resistance was tested again today. Right smack up against that resistance line. Zone. Could almost be an exact line. It's so close to 1, 2, 3, 4, 5, 6, 7 times now. out of 10, only 3 times it didn't touch the resistance levels and pull back, and we're already down 4 cents on corn. Hell, we might even end up with an outside down day today. Maybe. I like what I see. I think it's topping out. So we're going to get down to 473 if I'm right. And then we're going to get down close to this ballpark range of 458 to maybe 448 next. Wheat. Almost a bearish engulfing. We were overbought 2 days ago. That means we could have a red sell signal by the end of the day. I would be putting a new short sell stop 1 tick below yesterday's low. And if you are filled, and this is not an official recommendation, remember I was a commodity broker for about 35 years, stockbroker for a couple of years, president of a forex trading firm for 5 years, hedge fund manager, wrote 5 different technical market letters, and this YouTube for over 2 years now. So that's what I would do. I'm looking for a sell signal. It might happen by the end of the day. We are pretty close. Next chart. Cattle, new lows, coming down some more, probably toward 191.2, 192, maybe even 190 area. New low close seems likely. We made a new low. We're not yet below the previous low, which would have been better, will be better if it can still do it. And I hope it does. So I'm a little bit bearish, looking for a little bit further downside correction. I might add that our bearish engulfing ER sell signal on the February 3rd date has been working great. Rallied back 2 days later to approximately the middle of the range. Got short around the closing price on February 5th. And down you go the next day, big time. Came back just a little bit, and now we have new lows again. I like it. Nothing wrong with them. Great. Too bad we didn't get a sell signal on the high day, like that one. Or a buy signal on the low, like that one. And that one. They don't always happen that way, but frequently they do. Next chart is hogs. Almost the exact opposite. Looks like it could move up a little bit more. Bounced 3 times out of a support area. Yesterday, a minor new high for the rally, not particularly aggressively, and we had a problem. Yesterday was a bearish engulfing, and now you've got to get above yesterday's high on a closing basis in order to kill what might be a sell signal. Remember, if that had been overbought at the same time or within a few days earlier, it would have been a red sell signal. But for the moment, it's simply a Japanese bearish engulfing candlestick, which says the market should start to go down. It's not today at the moment, but we haven't violated the major rule, which is getting above the high of the reversal day, which is yesterday. So if you had some guts and you wanted to sell short now, my buy stop would be 93.12, 93.10. Yeah, risk is very, very low. Profit potential could easily be down into support, and maybe it'll break out on the downside and go down a lot more, low 80s maybe. And what do we got? XYZ stock. I have to abandon again another head and shoulder that looked like it was developing very nicely. And unfortunately, I just gave it all the time I could. So what we got? Broad support area, almost oversold. Prime target for a bullish engulfing buy signal, but not yet. Support giving way a little bit, but still good support in general. So maybe we'll come down to the bottom of the support area again, 80.25. Get oversold, probably at the time, if it's in the next day or two, and then get a buy signal or a double bottom. I really can't be very bearish because this symbol has broken out of a 2-year huge trading range, whopping big support historically. Already tested as we dropped down on January 13th to have a low, almost oversold, and then turned up. So I am looking for a little bit more sideways, a possible minor amount down. But in general, if you ask me where the market's going to be a month from now or two, I think it's going to be back up to 100 or higher. Next, the E-mini again. It looks like it's still having trouble. Let's look at the 1 minute E-mini. Yeah, it rallied back up to a little resistance a few minutes ago and it's starting to slip back down. Gotta have some significant up and down moves. I had a little birdie land on my shoulder earlier and said that Powell is going to be talking today and tomorrow both. And also we got some important economic news coming out. Now, I'm not a fundamentalist, but I am telling you that with all of this high-powered commentary and reports coming out, that could very well cause a lot of volatility. On your toes, profitable trading to you later.